This week is critical for Tesla stock in a bit of a make it or break it moment as Tesla is down 31% from all-time highs. It could get ugly from here if we do not see a recovery, or maybe the fear is overblown and maybe things get better. We have a lot of economic data and big earnings this week that will really decide the fate for Tesla. We did have some good news over this weekend that I will reiterate here in this video because markets could react to this, and Tesla stock could move higher based on some of this news. Ladies and gentlemen, thank you for watching. Hit that like button and subscribe to the channel to help push this video out to as many people as possible. Let's get started. It was reported that Tesla produced 450 new Model Ys at Giga Berlin during the first 2 days of production, according to Lars. Now, this just kind of highlights why deliveries were down so much in January and February. Stupid people, some of them, cannot comprehend this. I mean, it's a slow ramp process at first, and it's kind of like the iPhone 16. If the iPhone 17 is coming out in a month, you're not going to go out and buy the iPhone 16. You're going to wait for the iPhone 17 unless you absolutely need a new phone. Same situation with the Model Y. And some people just don't realize that. And honestly, this could be a positive for Tesla. Also in the news yesterday, Tesla is hiring several new positions for the Cybercab. 3 positions specifically for equipment technicians, 1 position for tool and die specialist, and another one for a process engineer. I don't know. It does seem like the Cybercab is on course to start production pretty soon. Call me crazy, but it seems logical to me. Uber's CEO says they will be competing with Tesla soon. Again, showing that Tesla's about to launch the Cybercab. And, honestly, Tesla's going to win in this autonomy race because let's be honest, a Waymo vehicle costs $250,000. A Cybercab costs $25,000. Tesla's going to be able to offer rides that are substantially cheaper than the competition if, of course, they wanted to undercut the competition, which is kind of Tesla's strategy. And from that perspective, it's going to be hard to compete with Tesla. Eric, on X, Tesla's lead engineer for the Cybercab, says Tesla will offer autonomous rides way cheaper than Uber. And I have to say, I think that's correct. Putin orders ministers to prepare for U.S. companies to return to Russia, and I don't know if this is good or bad. Elon Musk, just a couple of hours ago, says Tesla's self-driving feels like magic. Tesla's latest version of FSD, Tesla FSD v13.2.7, pulls off a mind-blowing save, where this individual is driving on a rainy highway and this car spins out and FSD completely navigates around the vehicle. And those were just some of the biggest news stories over this weekend that could have a positive impact to Tesla stock coming tomorrow morning. Considering Friday was such a rough day for Tesla and broader markets, it's something worth considering. You also had a VIX spike that was like 20% on Friday. I mean, normally after a VIX spike like that, fear dies down and you could see a bit of a bounce. Question is, with all of the upcoming data we have this week, all of the major earnings this week, do we bounce at least to start the week, or do we need to see some confirmation that the consumer is not falling out of bed, the economy is not heading into a recession, so on and so forth? Fed Goolsbee did speak as well yesterday. Fed Goolsbee says sentiment not as good as a predictor as in the past, basically referencing the political division within the University of Michigan's Consumer Sentiment Survey. At least someone on the Fed is acknowledging that. I think some of the fear that I have had and markets have had is that the Fed's just going to look at 5-year, 1-year inflation expectations from the University of Michigan and say, oh my gosh, we have a major problem. 5-year inflation expectations haven't been this high since 1995. Oh my gosh, and start freaking out. Whereas in all reality, Republicans expect no inflation, independents, inflation expectations really have not moved, but Democratic inflation expectations are through the roof. I mean, they're like screaming from the mountaintops that we're, going into another round of hyperinflation. And, that's just very political. That's very skewed. And right now, well, I think it's safe to say we're not going through another hyperinflation scenario. So it's good to hear Fed Goolsbee saying this is really not something they're paying attention to. Fed Goolsbee says still sees rates declining after a period of uncertainty. Fed Goolsbee says the Fed should be cautious amid government policy changes. Fed Goolsbee downplays increase in consumer inflation expectations. Again, that's what I just showed. And Fed Goolsbee says he is comfortable that the Fed is on track to achieve 2% inflation. But really the big story this week is going to be the economic data as well as earnings. That is going to be the main catalyst for markets this week and for Tesla stock, as long as we don't get any good or bad news from Tesla specifically. So first and foremost, let's start with the economic data, because it's really gonna be a big freaking week for data, especially again considering Friday, where you have these growth concerns that affected the markets as much as they did. Some of this data is going to be critically important. Starting off on Monday, 8:30 in the morning, Chicago Fed National Activity Index will be coming out, expecting that number to get a little bit better. Dallas Fed Manufacturing Index, expecting that to get a little bit better at 10:30 in the morning tomorrow. But really, manufacturing's not something that we're going to pay too much attention to. It's been in a bad place for a while. It's only 20% of the economy. Manufacturing, if that was going to put us into a recession, it would have done that a long time ago. It's services that caused a lot of the fear on Friday, with services PMIs that plummeted last month. Okay. And the consumer that's apparently, slowing down quite a bit more. Now, Tuesday morning, 4:30 in the morning, you're going to get a speech from Fed Logan. Keep that in mind. S&P Case-Shiller home price year over year. House price index for December, house price index month over month and year over year as well will be coming out on Tuesday. S&P Case-Shiller home price month over month also coming out Tuesday morning, 9 o'clock in the morning. CB consumer confidence comes out at 10 o'clock in the morning. Richmond Fed manufacturing index, manufacturing shipments, and services revenues will be coming out at 10 o'clock in the morning. Dallas Fed services index will be coming out at 10:30 in the morning as well. Fed Bar speaks at 11:45. Fed Barkin speaks at 1 p.m. And you have a 5-year bond auction at 1 p.m. as well. These 5, 7, 10-year, 20-year, 30-year bond auctions are important right now because they do not really revolve around the Fed's policy changes of next month or next year. They really trade more along the lines of, what does Washington's deficit spending look like? What's the risk to the government? And what's inflation going to be like over the next 5 years? That's what more or less kind of feeds into 5-year bond auctions. So if those 5-year bond auctions come in good and the yields fall, or don't come in as high as expected, 10-year treasury yields are going to fall, and that's going to be a positive for markets. Really positive for 10-year treasury yield, which is a positive for markets. Now, on Wednesday, you will get a speech from Fed Barkin at 8:30 in the morning, new home sales for January at 10 o'clock in the morning, and new home sales month over month at 10 o'clock in the morning. You will also get a 7-year bond auction. Again, 7 years, a little bit more important than the 5-year. That comes out at 1 p.m. on Wednesday. Fed Bostic speaks at noon on Wednesday, and that's pretty much it. On Thursday, it's the start of really your data dump. You get durable goods orders month over month. Last month, you were negative 2.2%. You're expecting a positive 1.3% number. Now, your GDP growth rate quarter over quarter, second estimate for Q4 will also be important, expecting that to fall from 3.1% down to 2.3%. Initial jobless claims will be coming out, expecting that to rise from last week. And we can see the inventory data is very important as well. Where is that? Might be on Friday. You could see real consumer spending quarter over quarter, second estimate for Q4. Fed Bar speaks at 10 o'clock in the morning, pending home sales month over month and year over year at 10 o'clock in the morning as well. And then on Friday, you get, again, another data dump. Core PCE price index month over month. Last month was 0.2%, expecting 0.4%. If that comes in lower, that's good. Higher, that's bad. Personal income month over month expected at 0.4%. Keep in mind, this is really not consistent with 2% inflation. We want to see this go down at this point, okay? Personal spending month over month is expected to fall from 0.7% last month down to 0.2%. A number that comes in lower than 0.2% is going to be seen as a negative and kind of bring up more of those, economic concerns, growth scare, if you will. So that's a big number to be watching for on Friday. You will get retail inventories excluding autos, wholesale inventories month over month, advanced data for January, Chicago PMIs that will be coming out. And why some of this data is so important on Friday is because it will change the current estimate for GDP for Q1, which a recession is 2 declining quarters of GDP. So Q1 GDP for 2025 is currently estimated at 2.3%, but we will get a new update this Friday, February 28th, based on, again, a lot of that inventory data coming out on Friday. So this will be important just to, again, confirm, is the economy slipping? Is GDP slipping a bit? And I think that's what markets are going to pay very close attention to. Again, Chicago PMIs, 9:45 in the morning as well. That does tend to be a market moving catalyst also. Now, another huge story of this week is going to be earnings. There's going to be actually quite a bit of companies that you're going to recognize here that are important. Coming Monday morning, you have Domino's and Berkshire Hathaway. Monday and after hours, you have Hims and Hers, Riot, Tempest AI, that's that Nancy trade, Cliffs, Zoom, Diamondback Energy, Realty Income, Chegg, and Trip.com. Tuesday pre-market, Home Depot, Planet Fitness, Keurig, DigitalOcean, Krispy Kreme, Scotia Bank, American Towers. Tuesday and after hours, Kava, AMC, Axon, First Solar, Lucid, Instacart, Lemonade, Workday, Zeta, and Intuit. Wednesday morning, you have Lowe's, NRG, Advanced Auto Parts, AB InBev, Stellantis, UWM. And then Wednesday and after hours, look at that. You have NVIDIA, Snowflake, C3 AI, Salesforce, Joby, IONQ, Root, some other names. Now, NVIDIA, I'll be the first to tell you it's not as important this time around as it was previously. I mean, following the whole DeepSeek situation, we've had your big tech names that have reported earnings. So NVIDIA would have been a lot more important if they reported first, or were among some of the first, multi-trillion-dollar names to report. They're not. And we already know what the CapEx guidance looks like. From Meta, from Amazon, from all of these other companies. And they've actually just raised their CapEx, guidance for this year. So at least for this year, things seem to be fine. Now, I think a lot of attention is going to be paid to Blackwells. And if NVIDIA is still on track and going to be able to push those Blackwells out, an issue there could be an issue, broadly speaking, for the markets, just because of NVIDIA's size at this point. It's a very large company. But I actually expect that given the stock has sold off quite a bit, you could see a very positive reaction to NVIDIA earnings. Although I don't see too many people that are like bearish on NVIDIA. I don't think you're so bullish heading into NVIDIA's print that good numbers are not going to be rewarded. I think good numbers, good guidance, the typical NVIDIA beat and raise will be rewarded. Now, is it going to go up 25%? Probably not. Could it go up 5 to 10%? Probably. And I think that could overall be a boost to markets coming Wednesday and after hours heading into Thursday. Now, on Thursday, pre-market, you will get Norwegian Cruise Line, Vistra Energy, TD Bank, and some others. In after hours on Thursday, you will get SoundHound, Dell, Archer, Rocket Lab, Clover, Duolingo, Transmedics, and Opendoor. And then Friday pre-market, you have Fubo and some other names. Now, the consumer is going to be in focus yet again this week. Domino's, Home Depot, Lowe's, some of those kind of names. It's going to be important for, again, the consumer, for real estate markets, kind of going to tell us a lot, right? And I think Domino's is just important because of the consumer, right? Pizza's usually not something people like cut back on. If anything, pizza sales in recessions actually do pretty well because it's a good value. So that's going to be important to watch out for this week. Again, on Friday, the Fear and Greed Index completely plummeted from 45 on Thursday, which was neutral, down to 35, which is about midpoint exactly of fear. Market momentum, extreme fear. Stock price strength, extreme fear. Stock price breadth is fear. Put and call options, greed. Market volatility is neutral. Safe haven demand, extreme fear. Junk bond demand, currently in fear. Percent of stocks trading above their 50-day moving average had a big down move on Friday. 41.5% of stocks trading above their 50-day moving average. Markets are like not super great. Okay. Now I know a lot of people just look at the headline as a B and they say we're pretty close to all-time highs. Markets have done fine, but less than half of stocks are above their 50-day moving average. So over the last couple of weeks and really month or two, there's been a lot of downside momentum in markets. And broadly speaking, you feel this if you are a stock picker right now. Now, the AI investor sentiment survey is still sitting at very bearish levels, not quite as bearish as where we were, 2 weeks ago. February 12th or so, 47.3% of investors were bearish. That was a multi-year high. You dropped to 40.5% of investors that are bearish, but that's still very high. Neutral investors currently at 30.3% and bullish investors at 29.2%. That's just not a very good number there. And the VIX, I think this is also important. The VIX was up. Let's see. The VIX was up over 16% to close out the trading day on Friday. If you don't see the situation with the growth scare or the new coronavirus strain in China get worse, you're likely going to see markets get better. Okay. I know there's big catalysts later this week. Really, Thursday, Friday are the big days for data and big earnings on Wednesday. Could you see a bounce on Monday and Tuesday? Highly probable. And again, 10-year Treasury yields were down about 7 basis points on Friday, starting to break down a bit. You're now at the lowest levels you have seen since at least November 20th or so. Then you ultimately did fall to like 4.15%. So could 10-year Treasury yields continue to come down? Sure. And that would be positive for markets. But again, with the backdrop of the consumer slowing down, we'll have to just wait and see. I don't think it's as simple as 10-year Treasury yields fall and that's good. Because if 10-year Treasury yields are falling because the consumer is falling out of bed and there's a growing risk of a recession, then that's obviously not going to be seen as good. But again, for Tesla stock, as you're down 31%, you really need to see the situation continue to get worse. I think at this point, Tesla, if you get any good news at all, from a consumer standpoint, from 10-year Treasury yields continue to fall, Tesla should start to react positively, which is crazy because we've gotten a lot of good news recently, a ton of good news. There has been no shortage of good news, but it's like Wall Street just hasn't paid attention to this. Like other things have clouded investors' judgment around Tesla. And ultimately, I think that will be a mistake for big money investors. But at the same time, big money investors are actually covering on short positions at a record pace. They are the most bullish they've ever been on Tesla stock. And the option activity continues to be very bullish in Tesla. And we will talk about that a little bit more in the next video. In the next video, I will share with you a price prediction for this week, my expectation for markets specifically for this upcoming week. But with that said, that's going to go ahead and conclude this video. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.